Hello everybody out there, how are you all doing? I'm Kate Hill and I am here as always to give you the best and unbiased and honest commentary about our property markets. Stay tuned today for all your latest property news. Some housing markets lost a little more steam in May as a combination of higher interest rates, rising inventory levels and lower sentiment dampened conditions. The CoreLogic Home Value Index showed that Sydney and Melbourne dwelling values continued to record the most significant month-on-month falls, while Canberra recorded its first monthly decline since July 2019. Housing values continue to rise across the remaining capital cities. Sydney has been recording progressively larger monthly value declines since February, while Melbourne has fallen across 4 of the past 6 months. Canberra, which is Australia's second most expensive property market behind Sydney, would you believe, has experienced nearly 3 years of consistent positive growth. And although dwelling values increased 2.2% in the 3 months to May, softer house values and affordability constraints are likely to have had an impact. Perth, Adelaide, and Brisbane and the others are exceptions where the quarterly growth trend lifted in May, although both regions remain below the peak quarterly rate of growth. Whilst continuing to demonstrate stronger growth conditions, regional Australia has also come off the peak of its growth rates, with the annual growth trend easing to 22.1%, down from its January peak of 26.1%, and likely to trend lower throughout the rest of this year. Arguably, some regional markets will be somewhat insulated from a material downturn in housing values because of the ongoing imbalance between supply and demand. And we are continuing to see advertised stock levels remaining really low across regional Australia. Labour and materials shortages continue to blow out the time it takes to build a new home in Australia. The Reserve Bank Assistant Governor told the Urban Development Institute of Australia the average time to build a home was now 9 months instead of 6 months. They do not expect the pressure to ease anytime soon, as builders are dealing with a backlog of projects, but say that ultimately it will, of course, work itself out. Exactly when that will happen is hard to know, but when it does, we can expect some of the current rate of cost escalation and squeeze on margins to ease, they say. The Australian Bureau of Statistics figures show that residential construction costs increased by 10% in the year to March, and builders are experiencing continued delays. Word on the street is that if you are looking to build a new home now, you're looking at over 12 months before builders are able to actually start work. Buyers keen on an existing property are targeting properties in waterfront suburbs and affordable, family-friendly areas, according to Domain's analysis of real estate searches. It also found swimming pools, courtyards, and studies were top of buyers' must-have lists. Domain Chief of Research and Economics says that the housing preferences triggered by the pandemic continue to dominate where people are buying and what people are buying. The higher interest rates and tighter lending have reduced buyers' borrowing capacity, so they would have to look at what and where they can afford. Sydney's eastern suburbs of Randwick and Maroubra and Paddington attracted the largest number of buyer inquiries. In Melbourne, Southbank, South Yarra and Docklands are the most popular with potential buyers, while in Queensland, Surfers Paradise chalked up the most inquiries, followed by Upper Coomera, Kalanga, Caboolture and Redbank Plains. In South Australia, Christie's Beach, Henley's Beach are the most popular, while investors are keen on Munopara West and Davern Park. Now, as we all know, house prices rose at their fastest rate in more than 30 years during the pandemic, despite the absence of international migrants. Reserve Bank Assistant Governor says that Australia's population had been made smaller because of the drop in migration, but this did not affect the housing market, obviously, as we all know. They say that instead, prices continue to rise as more Australians decided to enter the property market. Household sizes fell as people moved out of share houses or their parents' homes. Some young adults moved back in with their parents at the onset of the pandemic. But that shift has seemingly since been reversed, they say. On the question of who you would rather be locked down with, at least some Australians have voted with their removalists' vans by moving out of their share house and in with their partner. Spurred by the experience of lockdown and self-isolation, many people understandably wanted a bit more space and perhaps a garden. Now, we will keep you posted on all things property from around Australia as our year progresses. Don't forget to hit the subscribe button, hit the like button if you like the video and you are enjoying all the free content, and I will see you again really soon. Bye.